Well, on to our top story of the day. India's startup ecosystem may finally be seeing the return of public market confidence, at least if the Kisht listing on the exchanges last week is anything to go by. Now, the Mumbai-based Fintech lender's IPO listed on the BSE nearly 12% higher than the issue price of 171 rupees. It climbed further to close its opening day significantly higher, giving the company a market cap of 3,511 crore rupees. The listing itself marks a major milestone for Hyderabad-based venture capital firm India Partners, delivering its first public market exit from Fund 1 nearly 9 years after first backing Kisht in 2017. Remember, this was a time when digital lending was still an emerging and relatively untested space. The timing here has made all the difference. Investor sentiment around fintech has remained cautious over the past few years, with markets demanding profitability, stronger governance, and sustainable growth instead of aggressive cash burn. Yet, Kisht's IPO still managed strong institutional interest, indicating that investors may once again be warming up to select fintech stories with proven execution. For India, the exit is validation of a long-term conviction-led investment thesis. And for the broader startup ecosystem, it also raises a bigger question. Are India's public markets opening up again for mature, disciplined, new-age companies? Joining us now to discuss the exit as well as the evolution of the venture capital ecosystem is Satish Andhra of India Partners. Satish, firstly, thanks so much for joining us here on South Central. My first question to you. Your first public market exit has come through Kisht at a time when investor sentiment around fintech has been more or less volatile, for lack of a better word. Does this IPO signal renewed confidence in India's digital lending space, or is the market still being selective about which fintech models it trusts?
Thanks, Jude, for having me on your show. Appreciate it. I do believe that, very clearly for startups, going IPO is another phase of journey. I mean, it's not end of their journey, it's another phase of journey. Obviously answerable to public market investors. So, we've seen many IPOs of startups in the past few years, but in the digital lending space, I think Kisht is the first IPO. One of the important things for any fintech entrepreneur is understanding of the domain, right? And then you wrap technology around financial services. It's not the other way around. So companies that know how to, build a very strong foundational platform that addresses, compliance, that addresses risk, that addresses governance, and then leverage technology for reach and distribution. I mean, they build businesses for long term. So I think Kisht is one of the first companies to go public, or the first company, in the digital lending space to go public. I know there are many others, waiting to. The most important thing is, in terms of your business model, your profits, your return on equity, your return on asset, and what is the undue advantage you have compared to the other players. So it's a great thing for the company, and congratulations to, of course, Ranveer Krishnan and the entire team that has made it happen. And for India, it's a very happy moment because, we've been with the company, from the very beginning, and we've had a ringside view, and we believe that they'll build a great institution.
Absolutely. In fact, you almost cued my next question, Satish. You began backing Kisht in 2017, 9 years ago, when digital lending was still a relatively untested space. What gave you the conviction in the sector to begin with?
Well, I just felt at that time, India's issue was not subprime. India's issue was near prime. That means people do not have derogatory credit history. They do not have any record or any credit history at all, which means basically, Bureau is not very rich, with data. Today, it's a very different story, right? I think Bureau itself has grown very large, the CIBIL. So you have to look at alternate sources of data, earnings and savings and, digital commerce behavior, other sources of data, and use data science to come up with risk models and be able to then offer products for small retailers or household businesses, some of the freelancers, all of them consultants, for them to be credit worthy and leverage, working capital to grow their businesses. So the conviction overall, in the opportunity, in the market opportunity, and as India, always backs entrepreneurs who are solving very interesting problems. And when we kind of partner with them, they're very early in the journey. So for us at that point of time, it's really the purpose and the energy of the entrepreneurial team and their clarity, in terms of solving the problem. And those things all checked out when we wrote the first check, focused along with Venture East. And, obviously execution has been flawless. And, there have been lots of kind of ups and downs in the journey. And as you would know, there was a COVID moment. There's always obviously, a fantastic regulator within Indian ecosystem who's keeping all the players very honest. And, how do you really also weather the economic cycles apart from the pandemic cycles to build an institution for the long run? I think the team has done a fantastic job. And so I think our belief in the team from day one and their ability to build a great institution has been validated. And like I said, this is another phase of the journey. This is not the end of the journey. I think they still have a very long way to go.
9.5 times subscribed with strong institutional interest is what we've seen. Do you think, Satish, that public market investors are now more comfortable with profitable fintech stories than just purely growth narratives, so to speak?
Yeah, I think in the end, public market investors want to back the teams that are running the marathon, right? I mean, of course, there'll be some short sprints, in their journey, but the teams that have capability to run the marathon and the commitment to run that marathon and finish strong, right, in the end. So, like I said, the metrics that people look for is, are you over levered? And, what is your, ROE? What is your risk, profile kind of looking like? And what is that undue advantage? Where all do you use, technology, whether it is in credit decisioning or fraud management or collections? All of these things, very silently, both institutional investors and to some extent family offices and even retail investors look at these nuggets, before they make their bets. So obviously, overall, 10 times oversubscription, and absolutely at an institutional level, 30 odd times, desire to be part of the journey validates that, this is a company that has the platform and that has the maturity in their thinking, and they're willing to back and also kind of realize upside and be, part of the journey. So definitely, yes, the markets have a very mature outlook in each domain, whether it's software, whether it's fintech, eventually even in deep tech. I think there are health metrics that they look for. It's just not growth at any cost. I think growth at any cost, if you're lucky, can happen few times, and people will reward that, maybe mostly in private markets, not so much in public markets. But measured growth, healthy growth is what public markets always care about in any part of the world.
Right. Absolutely. Matured growth it is. You made mention of the COVID period during one of your previous answers. Let me talk about that phase for a bit. It was also around that time that India, in fact, created dozens of unicorns during what was widely regarded as a funding boom. But many of these companies are still struggling with profitability, governance, or even weak public market performance. Would you reckon, at the risk of sounding perhaps a bit pessimistic, that the Indian startup ecosystem was overvalued and perhaps overhyped to begin with, especially in the context of the kind of funding activity we were seeing circa 2020, 2021?
Definitely, that's a very good, kind of insight. And if you reflect, Jude, there's a COVID moment for the entire world, right? I think where we went into a pause mode and we came out very strong. I think a lot of digital businesses in education and healthcare, financial services, D2C, e-commerce, they all grew, right, very fast because everybody was operating, in a kind of an electronic world, an online world, and a digital world. And post-COVID, of course, if you really look at some of the shifts that have happened, the geopolitical shifts, the commerce, trade and commerce, the immigration tightening, the overall AI, tsunami, of course, we're all witnessing now. I think because of certain factors like this, I think there's been multiples compression, in bunch of verticals. We know that very clearly. There's a multiples compression in SaaS or software vertical. There's a huge multiples compression even in some of the e-commerce and the D2C verticals, and AI is cynosure of all the I's. So companies that have built a platform, are still solving a real problem for the customer using technology, and have a good team in place, and have distribution mechanisms in place, I think they will continue to build valuable business. They may not get the same multiples that they've got during the COVID time, but nevertheless, they will end up building valuable businesses. But however, right, if someone raised money at artificial valuations and have spent the money for marketing or wrong reasons and do not have a solid foundation, right, they will face the music for sure. And definitely we will see many of these companies turning into living dead. And this is not just an India phenomenon, this is a global phenomenon we have to recognize. Right. And both, in specific sectors, right, or in certain geographies. So entrepreneurs always have to be alert. Absolutely. Have to obviously stick to fundamentals and have to run these marathons and continue to build and evolve their vision to build valuable companies.
Right. And Satish, before I let you go, one last question, if you could wrap this up for me. You spoke about AI being the cynosure of all our eyes, but what you've also seen is that while AI is attracting massive capital globally, many startups in India are still largely application layer business dependent when it comes to foreign models and infrastructure. Is India genuinely building AI innovation, or are we overstating our position from a global standpoint? Very quickly, Satish.
Well, that's again a great question, right? I think we have to obviously start out on a confident note. If you look at the overall AI ecosystem, you've got power, and then you've got the compute infrastructure that's driven by power or that consumes the power, and then you build data centers and put the compute inside of the data centers. And then you have to have the models running within these data centers, and applications get built on top of these models. So when you look at this hierarchy of power, compute, data centers, as well as models and then applications, yes, India's focus is a lot more on applications and some specific local language models, and these are very capital intensive. And I think building applications where you also have ownership, right, of data is the smart thing to do. And specifically in areas where, for example, physical intelligence, I think India can build, a data model. I think local language, India can build an LLM for sure. Right. So there will be few opportunities for us to build the models, but energy, we have to be on par. Compute, we can leverage from someone else and can have some amount of, right, local innovation. And then the LLMs and applications. So I think in a year or two, we'll get to know where we belong. And right now, I think we're all making bets and watching, the global tailwinds as well as the moments in the ecosystem.
Well, lots to look forward to then, Satish, in India's AI race, and lots to look forward to as well from the startup ecosystem that's hopefully seeing some green shoots of investor interest after a significant while. On that note, thank you so much for joining us and breaking down these insights. Great speaking to you, as always.
Yeah, good talking to you as always, and thanks.
Well, moving on then. After a decade in the opposition, the Congress-led United Democratic Front is back in power in Kerala. But even before the ink dries in the swearing-in ceremony, the new government is facing its first political stress test, and that's portfolio allocation. According to some reports, the friction within the UDF alliance is now becoming visible. Smaller parties like the CMP and the Kerala Congress factions are reportedly unhappy with the portfolios on offer, while rotational minister proposals have also run into resistance. It was only yesterday that Chief Minister V.D. Satheesan took the oath of office with a 21-member cabinet, including himself, but crucial departments are still stuck in negotiation mode, as allies, these reports say, are pushing for a larger share of power. For instance, the IUML, reports say, is pushing aggressively for 5 cabinet berths and key departments like industries, education and local self-government. Meanwhile, Kerala Congress factions and smaller allies are also demanding heavyweight portfolios instead of symbolic representation. Sources now indicate that Satheesan is likely to retain finance and key administrative departments, while senior Congress leader Ramesh Chennithala could get home and vigilance. From one leadership tussle to another in the Game of Thrones as far as Karnataka goes, the story may well be seeing its final chapter. At least that's what senior Congress leader and state minister, that Satish Jarkiholi, says. Earlier today, the minister said that Congress leaders from Karnataka may be summoned to New Delhi yet again, as the party leadership may be able to bring the curtains down on the Siddaramaiah DKS power struggle. Let's listen in to what that minister said.
ಅದು ಗೊತ್ತಿಲ್ಲ, ನಾಳೆ ನೋಡೋಣ. ಅದು ಡೆಲ್ಲಿಯಲ್ಲಿ ಕರೆಸ್ತಾರೆ ಆದಷ್ಟು ಬೇಗ. ಅಲ್ಲಿ ಇತ್ಯರ್ಥ ಇತ್ತು, ನಾವೇನು ಹೇಳೋದು ಅವಶ್ಯಕತೆ ಇಲ್ಲ. ತೆರೆ ಬೀಳ್ತಿದ್ದು ಬಹುಶಃ ಶಾರ್ಟ್ಲಿ ಡೆಲ್ಲಿ ಕರೆಸ್ಬೋದು. ಅಲ್ಲಿದೆಲ್ಲ ನೀವು ಹೇಳೋಂಥ ವಿಚಾರ ಚರ್ಚೆ ಆಗಿ ಅಂತಿಮ ಒಂದು ರೂಪ ಪಡೆಯುತ್ತೆ. ಇಲ್ಲ ನೋಡೋಣ, ಡೆಲ್ಲಿಯಲ್ಲಿ ಕರೆದ್ಮೇಲೆ ನೋಡೋಣ, ನಾವು ಹೋಗ್ತೀವಿ ಅಲ್ಲಿ.
Well, internal party conflict seems to be the order of the day and the flavor of the season in South India. AIADMK General Secretary Edappadi K Palaniswami is moving to consolidate control within his party amid a growing rebellion from senior leaders backing the ruling TVK in Tamil Nadu. Earlier today, Palaniswami chaired a crucial meeting with top office bearers and district secretaries at the party headquarters in Chennai, even as dissent within the AIADMK continues to intensify. Now, the meeting comes against the major backdrop of an internal power struggle, with rebel leaders including C.V. Shanmugam and S.P. Velumani pushing for a General Council meeting and extending support to Chief Minister Vijay and the TVK government. EPS, that's Palaniswami, has strongly opposed any move to align the AIADMK with the ruling dispensation and has already stripped several dissenters of party posts. My colleague Dharani joins us with the latest from the face-off.
As far as today's meeting is concerned, none of the rebel camp leaders participated in this meeting, because remember, just a few days back, the party positions of all the rebel camp leaders, they were snatched away by Edappadi Palaniswami. So all the rebel camp MLAs and functionaries, they lost their party positions because of their anti-party activities. So none of them, they've come to this particular district secretaries meeting. They're not part of this meeting. But meanwhile, we're also given to understand through sources that the rebel camp of ADMK leaders, they want Edappadi Palaniswami to convene a General Council meeting to discuss the party's future as soon as possible, because since 2019, ADMK has lost every single election, be it parliamentary election, assembly elections, or local body election. Every single election, it's been lost by ADMK since 2019. So the rebel camp of ADMK leaders, they want to hold a General Council meeting. They want Edappadi Palaniswami to convene a General Council meeting to discuss the party's future. But Edappadi Palaniswami has been evading this request. So that is currently the talking point at the moment, and it is at this juncture now EPS has held a meeting with his supporters, with his camp of leaders here at the party headquarters.
Well, Dharani there with a roundup of what has largely been a challenging phase for the AIADMK in the aftermath of those assembly elections in Tamil Nadu. But moving on to corporate news next, as we have been reporting, Royal Enfield is all set to begin building its latest plant in Andhra Pradesh. Its first one, remember, outside Tamil Nadu. The iconic motorcycle maker has announced a massive 2,500 crore rupee investment to set up a new greenfield manufacturing facility in the state's Tirupati district. Now, the proposed plant in the town of Tada will come up in phases and is aimed at boosting production capacity, with the facility also expected to include an R&D center, a testing track, and a vendor ecosystem. The move comes at a time when Royal Enfield's present-day production capacity of nearly 14.6 lakh motorcycles annually is nearing full utilization. Interestingly, Andhra Pradesh Chief Minister Chandrababu Naidu has reportedly asked Royal Enfield to fast-track the project and begin production within a period of 18 months. Meanwhile, Bengaluru-based real estate major Puravankara has posted a sharp turnaround in the fourth quarter, swinging back to profit on the back of strong project handovers and record sales. The company reported a Q4 profit of nearly 110 crore rupees compared to a loss of 88 crore rupees a year ago, while total income surged 173% year-on-year to over 1,540 crore rupees. Puravankara says accelerated handovers and strong housing demand drove this performance. Quarterly sales values, remember, have jumped 190% to 3,547 crore rupees. The company also clocked its highest ever annual sales bookings at about 7,407 crore rupees in FY26. Puravankara's CEO for South India, that's Malana Sasalu, spoke to ET Now on these earnings. Let's listen in.
This is basically on the basis of the launches which were deferred from the last year as well. That we've got 20 launches coming up in Bengaluru, which include some of the phase launching, some of the new launches, and I've got 3 launches coming from Mumbai, which are redevelopment schemes. And with these kind of launches, that the work, what it is showing up is what happened in the last 1.5 years of work that has gone into this one, putting together this impressive launch lineup. See, we are in real estate development. There is a component of real estate in all of the things like the data centers or retail, and these are all adjacencies of business. And we believe that we should be looking at these things, and there is a plan that is being hatched around, and the teams are being assembled for this purpose. Not only these two, and also we are looking at senior living and maybe logistics and industrial as well.
And staying with Bengaluru, the IMD has announced a yellow alert for the city, warning of continued rain and thunderstorms over the next few days. The city has been witnessing heavy showers in several areas from Monday, leading to waterlogging and traffic disruptions during peak hours. The weatherman says isolated heavy rainfall, lightning and gusty winds are likely across Bengaluru and parts of south interior Karnataka as pre-monsoon activity intensifies over the region. And more news from Karnataka. The state has rolled out India's first alcohol in beverage or AIB-based excise duty structure, a major overhaul that changes how liquor and beer are taxed in the state. Now, instead of taxing alcohol by volume, the new system links excise duty directly to alcohol content. The Siddaramaiah government says the move is aimed at rationalizing liquor prices and modernizing the excise framework. So under the new regime, premium spirits and mild beers are expected to become cheaper, while some lower-end liquor categories could see price hikes. The new policy also marks a shift towards deregulation, with liquor companies now getting greater flexibility in pricing products within defined slabs instead of operating under rigid government-fixed pricing. Meanwhile, in Tamil Nadu, Chief Minister Joseph Vijay has sparked a political controversy after paying tribute to former LTTE chief Vellupillai Prabhakaran on Mullivaikal Remembrance Day. In a post on X, Vijay said the memories of Mullivaikal would remain quote-unquote in our hearts, and reiterated support for the rights of Tamils living across the sea. May 18th, remember, marks the end of the Sri Lankan Civil War in 2009, when Prabhakaran was killed by the Sri Lankan army during the final phase of the conflict in Mullivaikal. The LTT, remember, remains a banned organization in India for its role in the assassination of former Prime Minister Rajiv Gandhi in 1991. And with that, it's a wrap on the bulletin today. Thanks so much for watching. We'll see you soon with more news and updates from South India. For the moment, it's goodbye from us.